What's up guys, Mo here, welcome back to another video. So in today's video, what I'm going to be going over guys is my swing trading strategy. So today what I'm going to show you guys is how I go on to basically my higher time frames, such as my daily, my weekly time frame setups with very low risk. Now this is going to include going from a lot of different time frames, switching back and forth from the daily time frame to time frames even such as the 30-minute time frame, because basically what I do here is I'm gonna actually show you guys right now. So obviously the first step that I like to take is take a look at my weekly time frame structure. Okay, so I usually go on to my weekly time frame just to see if I'm going up and down and to see if I'm hitting any maybe any supply and demand zones, any points of interest, hitting any imbalances, institutional candles, whatever it is. So I'm gonna actually start off first of all with Euro JPY. Okay, because this is one of the trades that I actually took today and yesterday. I was able to catch two sells on Euro JPY. Very nice trade. So obviously one of the things that I want to check is the higher time frame structure. I'm not really concerned about the point of interest right now. One of the first things that I want to check is what is my trading range doing right here, my most recent trading range. And my most recent trading range would be this one right here. Okay, so this would be considered my most recent trading range. And as you can see, very simple. We broke structure right here. Okay, we had a break of structure and we're just continuing creating higher highs, pull back higher high. Okay, so very simply, okay, very simple market structure right here, where we are in a bullish market on Euro JPY right here. Now as we come up to this level, you can see we are approaching a fairly strong level right here, point of interest right here. You can see how this is a very reactive zone right here, so you can consider this some sort of resistance. You can see how price keeps constantly reacting off this area multiple times in the past. We're talking like multiple years. Okay, so it was very clear to me that we're probably going to get some sort of reaction from this level anyways. Okay, on the weekly time frame we don't really have much else that I really want to look at, so I'm going to drop down to my daily time frame, and this is now where I'm trying to look for any institutional candles that I might have on the daily time frame, etc. So now I'm going to my daily time frame. Now obviously the price action right here is very far back, but as you can see right here, okay, once again you can see we are approaching an area where we have an institutional candle. Now this is a 2-day institutional candle. Just by looking at it from the daily time frame, I can see that this is a 2-day institutional candle, and you can see my orange line right here. Okay, you can see my orange line right here was placed at this 2-day candle, or you can place it at this daily candle. Okay, so you can see how I can place this at this daily candle. You can see how price reacted off here before. Now here's the thing with daily institutional candles, weekly institutional candles, very higher time frame institutional candles usually can mitigate multiple times. Okay, so just because it's mitigated once doesn't mean that it's invalid. And you can see if we look back once again, okay, we were literally reacted right off the wick, say. Okay, right here, boom. You can see how that was an extremely sniper entry on the daily time frame. Now one thing with the daily time frame institutional candles, usually if the wick is very small, it usually react off the wick instead. Okay, usually will react off the wick and not the open. Rarely comes up to the 50%. I don't really see it much, but it's usually the open or the 50% or the wick of the institutional candle. You can see reacted beautifully off the wick. And remember, those are our 3 main entry points. Okay, so here, do I look to frame my setup right here? No, I don't. Okay, this is where my low risk strategy comes in, and this is how I swing my trades. Okay, now if I had my stop loss, let's say right above the wick right here, or right above the close of the institutional candle. Now this is a very easy 60 pip SL, which is big if you have a small risk reward, but we're really not looking at risk. We're really not looking at pips or SL sizes right here. What we're really focusing on is risk rewards and percentages. Okay, so from risk to reward perspective, this isn't a very bad trade. Now depending where I want to aim, now probably one of my first targets will obviously always be this imbalance right here. Okay, because who knows, this could just potentially be a pullback, okay, down to the imbalance and another push up. So we can't really aim for areas such as down here, like maybe aiming for this like trendline liquidity or whatever it is, if we don't get a break of structure on the daily time frame. And this is something that a lot of people need to understand, is just because you have a break of structure on a 15-minute time frame or the 1 hour or lower time frames doesn't mean that that break of structure is going to count on the higher time frame. Now you need to wait for a break of structure, a confirmation on one of these higher time frames. Okay, for me, Euro JPY is still not considered bearish until it breaks this low right here. Okay, and this would be considered my break of structure. Once it breaks this low, maybe we see some distribution right here, and then we look for further down prices. Okay, now obviously So as I said, my first take profit would be this imbalance right here. Price is heading towards there, nearly hits it anyways. So this trade would only be a 2-to-1. This is the problem right here. I do not want to trade that's like this. So usually what I'll do is I'll hop down to the lower time frame and I will try and see my break structure first of all on the lower time frames, or try and look at an institutional candle lower time frame, or the 50-minute or 30-minute, etc. Okay, so obviously, as you guys already know, the mitigation candle, okay, the candle that usually mitigates our initial big candle on the daily or the weekly time frame, usually leaves a secondary institutional candle for us, and you can see that right here. So you can see, let's see, 50-minute or 30-minute. 30 minutes better. I'm going to check as well the 45-minute. That's a time frame that I usually really like to trade as well. So yeah, okay, there you go. So you can see how the 45-minute time frame right here, we have our institutional candle that pushed up, touched our institutional candle on the daily time frame, okay, and then we had first of all the break structure on the 45-minute. Now this isn't that necessary to look for, especially if you're trading on like the 2 hour to 1 hour, but if you're looking for a 45-minute setup off this institutional candle, my first confirmation would be to break structure below here. Now obviously this is not really a major structure here. I mean, it is up, it's a pullback, another push up, okay, and obviously the break structure happened right here. My better break structure for me honestly would have been the 1 hour time frame, I guess, or the 30-minute time frame, but we still haven't gotten any of those yet. Now obviously we can just consider this to be my number one confirmation in this scenario. Price pushed down and now reacted up. Now once again, what do we have here? Now if you take a look at this price action in general, just before it touches that institutional candle, okay, if I drop down to my 5-minute time frame, you can see how we had another beautiful tree market phases. Okay, we had a consolidation. Not really going to go over this because there's some more that I cover on the course, to be honest. And then we expanded to the upside and we hit the open of our 45-minute IC beautifully. Okay, open a 45-minute IC, fill in the imbalances. You can see right here the imbalance, we fill that in, and away we go. Now my second confirmation would be it failed to break this high. Price failed to break this high. Now you can see right here how if I took my trade right off this area from a 60 pip SL, okay, from a 60 pip SL, now we've decreased our SL to 15 pip SL. My take profit can easily be the same. We have a lot of imbalances right here, so I can still aim for this area. And now you can see I've literally went from nearly a 2-to-1 right here on the same target to nearly an 8-to-1 right here. Okay, we probably aim for this last imbalance right here, or we could aim for this liquidity if we're looking for more of a 45-minute setup. Okay, 45-minute target would be this liquidity right here, which is where I'll probably be taking profit since it is a Friday and I am in this trade currently. So let's say you missed this trade, of course. Okay, you missed this trade. Obviously there was a Fibonacci confirmation right here to hit one of our premium areas, but I'm not really going to cover that right now. There's too much to cover and we just don't have the time to cover that all in one video. But let's say we missed that area and you just instead waited for a break of structure. You waited for a new lower low to form. Okay, break this low right here and fail to create this high right here. Okay, so we have something like this. Okay, and break, fail to break the high, pull back up, fill 50% of the imbalance right here, you can see, and then drop down. Now I would look to find a scenario number one setup, okay, and you can see the scenario number one setup is extremely beautiful because it came in right at the 8 a.m. London open for me, and this always happens where you get that fake London rally. Okay, the dogs are going crazy outside for some reason. To go and close the window there really quickly, so as I was saying, you can see just before that London rally, okay, we had a fake London rally right at this area. Okay, it'd be probably clear if we went down 5-minute time frame. Okay, once again, the usual stuff, consolidate, manipulated these highs, drop down, and then we get in on, once you see that broke that structure right here, okay, on the lower time frame, now we get in on that retracement. Now that would be our 1 hour IC right here. Okay, so my 1 hour IC. Boom. And now you can see how I'm even able to get an even smaller risk reward on this. Higher risk reward, sorry, smaller SL. 5 pip SL. And now if I target this, now I'm at 8-to-1. Okay. And if I target my long-term target, now I am at nearly a 17-to-1 risk reward. And literally we're nearly halfway there. Okay. I am currently up 40 pips, so I'm nearly halfway there. And my first take profit would be this area here. So basically, to recap on here, what I'm doing is I'm looking for these higher time frame points of interest, and I'm not taking it straight after higher time frame point of interest. I'm dropping down to lower time frame after it reacts, okay? And then I'm looking for my smaller time frame institutional candles. So basically what I'm doing here is I'm using all that higher time frame market structure, etc. I'm using the higher time frame take profit targets, etc. And I'm looking for a smaller time frame entry instead. Okay, so this is why I told you guys that we're going to be moving from time frame quite a lot. Now, okay, so another example right here, we have USD CAD. So USD CAD, I would have avoided this for quite a while because we just had multiple consolidation phases right here. But one of the first things that I would look for, obviously, is that breaker structure, okay, and that liquidity grab. So my liquidity grab here was very, very clear. Okay, very, very clear. If we go for our time frame, look cleaner. Okay, obviously this is as clear as daylight for most people. Liquidity grab, boom, and a drop down, and a breaker structure here. Okay, so obviously our continuation down was now going to occur. So what do? I obviously have my scenario number one set up. We have a bearish engulfing candle. Okay, we have a bearish engulfing candle right here, and all I have to do now is just look for push up on price again, touch my open of my institutional candle, and then absolute drop. Now what can I do? I can go down to my 30-minute time frame, and this is what I do. I look for the institutional, basically the candle in the lower time frame that reacted off my daily, which would be this, and there you go. Now we have that institutional candle runs up to the open, and now I can have, instead of having nearly, this is a massive SL by the way, like a very, very big SL, I'm gonna, instead of having nearly 100 pip SL, now I only have a small 20 pip SL compared to, and obviously my target would be down here. Okay, my SL would be right here, giving me a nice 8-1, which would have been, the take profit would have been hit already. Okay, so that's pretty much it, guys, for this video. Hope you guys gained a bit of value from here. So once again, if you guys are interested in getting more of these lessons and hopping onto our smart money course, we are coming out with absolutely unreal courses to do with order flow and Wyckoff very, very soon in the coming weeks. Our app is pretty much done its development, so we will be releasing that very, very soon to you guys. And yeah, once again, if you're interested, head on to fuacademy.io and we'll get you started right there. The team will take care of you. So I appreciate everyone for hopping on this video, and I'll catch you guys on the next call. Have a good day. Bye bye.